People are writing into us now saying we are going to get a Diwali bonus because things are looking up in most industries right now. They want to know, should we use the Diwali bonus to pay off a portion of our home loans or should we invest it in equity? Which way would you go?
Home loan.
Home loan, really? Yeah. But, you know, if you're
That's
assuming...
That's a white lie.
No, I mean, I'm saying that you might as well just get rid of your liabilities. I mean,
no, but home loan is at 10.5%.
That's a change tone.
If you're looking at, you know, a multi-bagger bull run over the next 5 years, you're looking at much more than 10%, aren't you?
Safety is always better.
That's a changed man.
Nikut is in a different mood today. Let me also get Dhirendra Kumar's view. Dhirendra is the CEO of Value Research. Dhirendra, thank you for joining us. We heard what Nikunj had to say. He said he would focus on knocking off the home loan. And I want to ask you the same question as well. Should we be using our Diwali bonus to prepay a portion of our home loans, bring down the EMI or shorten the tenure? Or should we invest in equity? What advice would you give investors right now?
Then carry on with your home loan. Generally, when you are thinking short term, I always suggest that never borrow to invest your money in the market. Never invest to borrow money borrow money to invest in equities at all in any form. But that is generally a short term view. If you are borrowing to invest to benefit in the short run, that could be very dangerous and risky. But when you are taking a 15-20 year view, when I combine it with all kind of other advantages, for example, you have two benefits or three benefits. One is that when you are going to buy a house where you will start living, you will start saving on the rent. The other is that you will get a tax break on the interest payment. The third is that you will be incurring a cost, which is the interest on your home loan. But on a 10-year, 15-year, 20-year view, I'm confident that equity will always deliver more returns. So if you have lump sum money, I would say that it is better to invest that money in the equity or in an equity fund. Important thing is that you should not be thinking short term with your investments, and you should be disciplined about it. If you are going to get a sizable investment, a sizable Diwali bonus, don't invest lump sum. Spread it over the next 3-4 months, or maybe add that money to your regular savings plan and increase your SIP amount.
Well, Dhirendra, if we were to choose to invest in equity, obviously then we're attempting to beat that 10.5% interest rate over the long term of, say, about 10 years. What sort of investment would give us that return?
It entirely depends on, how uncomfortable you get with a decline, with a fall. If you get very upset, then consider, a stable growth portfolio, a balanced fund. If you are fine with an interim 15-20% decline in value, because if you get little venturesome, if you get little aggressive with your fund selection or the kind of investments, and if you are investing with a 10, 15, 20 year view, I'm confident that you will never have a loss. But the problem is that you are taking a 20-year view, but you look at the investment value every day, and more so when the markets are down and you get depressed, you get prompted to act, which could be quite harmful. So it entirely depends on your temperament. If you are fine and if you're going to be disciplined enough not to look at the investment values over a period of time, go for our aggressive growth portfolio. If you are conservative, go for our stable growth portfolio. If you are ultra conservative, if you get extremely upset, then I would say that then those are the kind of investors who should seriously consider prepaying their home loan and save on their taxes, because fixed income return, a recurring deposit, is always going to earn you less than what your home loan will earn you.
In fact, Dhirendra, most provident fund trusts allow investors to withdraw a portion of their PF when they're buying the house or to pay off their home loan. Do you recommend then using a portion of our PF perhaps to pay off our home loans?
Yes, this is not a bad idea, because many people look at PF as something which is a sacred money, you don't touch it, but I think it is not desirable, because your home loan you are incurring a cost of 10.5%, and on your PF, which is your sacred money, is actually earning you just about 8.5%. So there is a differential. Your money is earning less than the money, your cost of borrowing. So that might make sense. And at the same time, this money is not getting wasted because it is getting into an asset accumulation. It's a house you are living in. It is far safer than money being entrusted to anybody else.
All right, Dhirendra, many thanks for answering our questions this afternoon.